going on, everyone? Welcome to Decred in Depth. I'm your host, Angelo, and on today's show, I got my crew with me again, my boys, Checkmate and Permabull Niño. What's going on, gentlemen?
It's great to be back on Decred in Depth. I love doing these roundups. There's always so much to talk about in this space, and it's good to cover Decred and everything that's been going on.
Yeah, likewise. I mean, there's always so much going on in the Decred community, for how on a market cap basis, the amount of output that goes through the community and from the community on a weekly and monthly basis is just unmatched. So, it's always great to get on the show and talk some Decred with you guys.
Excellent. So let's start off this roundup with Check, your last paper. You want to go over that a bit?
Absolutely. Yeah, so the last paper that I put out was the third and final from my first proposal, phase one. And what it was really trying to look at is kind of an audit of the entirety of the Decred project. And it specifically focused on the four key stakeholders. I mean, what's really interesting about Decred is because of its hybrid consensus mechanism and the way that it functions in terms of coin distribution and the mechanism by which it actually spreads coins out. If you're you're often a stakeholder in more than one element. So there's a really interesting blend of psychology of, miners who are also stakers, contractors who stake and are also users in terms of using it as a store of value. You've got people who start as they initially buy DCR to, looking at that speculative store of value, and they end up moving into the realm of being a stakeholder. You start with split tickets, you start to understand more about the project. And to be honest, this was my journey, right? I started buying DCR because I understood the store of value properties that it held. And I see it as a very strong hedge against, some of the challenges of Bitcoin. I see it also as a complete contrarian bet to what Bitcoin has done. So it kind of matches on either side. And then I found myself building my way up towards, getting into tickets. And then the more I staked, the more I read and understood. And that skin in the game element really got me thinking about the project. And next thing you know, I'm considering moving in and being a contractor. So, all basically, I would fit into the three parties of user, stakeholder, and contractor, and that's been a process. And then you've got miners who would be doing their own process, and people kind of cross between those different areas. So, what I was really looking at is when we look at on-chain, and Nino, I know you talk about this. On-chain is kind of a very high signal psychology. It's a real psychological truth about what's going on for the people behind the ledger. So what I really looked at was within each of those four categories, and being aware of those overlaps of stakeholders' behavior. How is the chain actually performing? What kind of information can we divulge from looking at the on-chain behavior? So it was kind of a bit of a project audit, looking at how it all works, and I can probably step through each of the different categories and some of the real highlights. From the user standpoint, what was really interesting is just how much value Decred has actually settled. And I like to use Bitcoin as a yardstick. So in a lot of my papers, I'll compare Decred to Bitcoin because they do have the same fundamental properties of being, fixed supply, deterministic supply schedule, store of value candidate. And I use that as a bit of a yardstick because otherwise you can look at numbers and it doesn't quite give you a sense, because we know that Decred is a smaller project than Bitcoin. Although when you look at it on an age-for-age basis, Bitcoin was about the same size at Decred's age of 4 years. So it makes sense to actually use it as a bit of a yardstick and compare like for like so we can see how it's performing. And what was really interesting is how much value. So Bitcoin, and again, this is a couple of months old, but Decred has basically settled $11.5 billion worth of US dollar denominated value, which is quite remarkable. And of that, we can divulge that about 50% of it is ticket-based behavior. And that includes, so with tickets, you have the initial purchase transaction. You also have the vote transaction. So there's a number of transactions that account for tickets. So that's all built into that. So around 50% of Decred's activity is from staking. And what I really pulled out of this is that the staking process really is the dominant use case right now. And then if you take that a step further, why are people staking? When you actually buy a ticket, you are sacrificing liquidity. You would only ever sacrifice that liquidity and go for the proof of stake reward if you want to A, participate in the governance process, and B, you're long-term bullish, right? As we move into a realm, let's just assume Decred goes on its run. When you get to a point where stakeholders start feeling like it's overvalued and start, potentially being bearish in the short term or looking to take profits, the signal coming from tickets will tell us that people are more likely to be selling into strength than buying tickets. So buying a ticket is a very high signal bullish indicator. So we can really use that to say when we're getting that that ticket flow coming in, that people are actually in general bullish on the project, and that's really what we were able to pull out of this particular study. I think one of the other things that was really interesting was looking at, from a user standpoint, is looking at the actual spend rates and how many the transaction volume, how many physical transactions, and what kind of value is flowing through those transactions. And one thing that really stood out to me is coming up to after the privacy release, the number of transaction counts increased, the amount of value that's being transmitted increased, and the amount of fees that are being paid increased. And all of these things are actually a very, very high signal that the privacy mixing has a strong demand. And it's also a long-term benefit for the mining and the maintaining the fixed supply. Because if we have this continual flow of tickets, but also demand for privacy mixing, that actually adds value for miners, right? Longer term, they can actually start to rely on that as an additional income. And, from a mining standpoint, we saw that the fee levels basically were curtailed after the stake difficulty algorithm. Very, very clear that vote and the fact that it passed with 97% approval is a strong signal, and I'll talk about that in a second. But the mining approval to change the stake difficulty algorithm reduced the fee income quite substantially. So it's really positive to see the privacy mix come in and actually starting to generate a new source of fee revenue because of demand for on-chain transactions. And just going back to the stake diff change, the reason that was a really important vote, and I actually think it's one of the most important governance decisions that's occurred for Decred, because the chart that I presented basically showed that fees were a very substantial portion of miner income. Let me just pull up my chart and see where we were actually at. So when the stake difficulty algorithm was doing the oscillation and the resonance, it wasn't a great user experience, but we were talking about 1% of the total transaction or block reward was coming from fees. And for context, that's pretty much where Bitcoin is right now. So in early life, Decred fees from the resonance was providing miners with 1% of their income. So that's quite substantial. We're talking about a coin price down at 50 cents, $1.50 in this range. So once that actually switched off, it indicates that because miners who are large stakeholders, there's one of two kind of outcomes here. We know that miners were largely GPU dual mining, Ethereum miners who were dual mining DCR, so attributing a little bit of their hash power to mine DCR on the side. There's been some studies that Dave Collins did that showed that most of those coins were basically being immediately distributed. So it tells one of two things. Either miners were just distributing coins straight to the market and didn't care, which I think is the most likely scenario. Ethereum miners were just basically getting that little bit of additional income, which means that coins have been very widely distributed. That's a positive for coin distribution and vote distribution. And effectively, it's a benefit to decentralization. Or the miners were actually voting in the thing, which I think is less likely, but miners were actually voting in that, and we still got 97% approval. So in either case, changing the stake diff algo, which was definitely in the best interest of users, not so much in the best interest of miner income, shows that there's either a very good vote distribution and or we have strong alignment of incentives where the miners still voted to provide users a better user experience and improve the protocol for the long haul. So I think that's a really important insight, and it's quite fascinating that we can see this coming out of the on-chain data. For the stakeholders, as we said before, tickets are a really high signal, high conviction note, and we actually see within the stake participation, we get fairly marked uptrends. So a lot more people are committing capital, and we normally see the ticket price start to increase around consensus votes. And that, again, that indicates that people are willing to lock up their capital have their say and actually contribute to the governance process. And I mean, on-chain votes are a really important facet of Decred. The ability to hard fork with explicit approval from users is, I think, a very, very unique feature. And I think Decred implements it in a really elegant way. And the data really shows that people are willing to commit and actually contribute to that process, which is a really positive element. And then I think the last element that was it was the first time I've really looked at it in detail, but was looking at the Treasury spend and how much is coming in, how much is going out, what do the flows look like. And this was to me, this was really exciting. This was actually my favorite takeaway from the piece. So of all of the DCR that's been flowing into the Treasury, and granted this is about a month or two old, so it'll have changed a little bit from here, but more or less, Decred has currently spent about 33% of what has come in terms of DCR. If we map out the full amount of DCR that will come in at the end of the block reward, we're talking about 16%. So we've spent 16% to date of the total DCR that will ever come into the Treasury. Now, if you price that on at the day when the transactions go out, what the actual dollar value is. So it's not quite the same as what goes on in the contractor space because it's based on a 30-day moving average. But from an on-chain perspective, I've just priced it at the day that it got spent, whatever the dollar value was at that time. So there'll be a bit of a delta there. But basically, Decred has spent about $7.25 million. Now, when you look at the value of the project from a fundamental perspective, it's incredible that we've only spent $7.25 million to bring the project from genesis to where we are now, right? It really is one of the most amazing output to spend ratio projects in the space. I would even go so far as to say the most impressive. You look at a lot of the ICO type models that we've seen in competitors, and we're talking about hundreds of millions of dollars. Now, whilst this is that kind of provides a well-capitalized system, it's generally not great for coin distribution. It's not great when it comes to regulations and being determined as a security. And we're talking about enormous amounts of money that are centralized, right? A lot of these foundations that hold these funds are a central point of failure. And if you can imagine that any of these systems were actually targeted by by regulators or the like, that would be a huge fundamental hit. Now, we can't ignore that that's the same for Decred at the moment, but we're taking those steps to fully decentralize the Treasury. So it's a really amazing spend to output ratio. And I think the only thing to really note from all of this is that we've certainly seen an acceleration of DCR spend. So the dollar value has been relatively consistent, right? We've got about 70 odd entities as contractors currently billing to the Treasury. So which is, again, that's fairly substantial when you look at the actual spread of people. They're all over the world. So the development and the research and the marketing arms of Decred are very decentralized. We've got people spread out all over the place. And really the thing to probably be aware of is that there has been an acceleration of DCR spend as a result of the depressed prices. So we're all aware that this bear market is pressing on for probably longer than most of us would like. And it's one of those things that as the price comes down, the amount of DCR to cover the fixed USD value increases. So there is a bit of a spend burn there, but at the same time, at the end of the paper, I put a kind of a snapshot summary, so stakeholders can really have a look and see how much is being spent, how much have we spent to date, what does our output look like, and make a rational decision based on that. And I think at the end of the day, what this whole paper was trying to give back to stakeholders and say, look, in the last 4 years, and I released the paper pretty much on the 4-year anniversary, so it's kind of a nice way to wrap that up. In the first 4 years, this has been the performance of the chain. This is what we've spent. This is what we've built. This is the psychology of the people who are behind every transaction. Now we can make a data-driven, rational decision about what is going on in the Decred space. And it basically provides the tools for people to make that educated decision. And I think that's one of the most valuable elements of DCR is the stakeholders are, and this was my story as well, you become increasingly committed to understanding the chain and the fundamentals. And what you need to do that and make those sensible decisions is the data in front of you. And that's really what this was all about. It was about putting the data in front of stakeholders, giving them, real information to make decisions on. And, beyond that, you trust the tickets, right? You trust the vote of the tickets. You trust the collective wisdom. And I think that's really what that was the key take home from this particular paper.
incredible. Be sure to check it out on Medium if you have not read it.
Yeah. It was a beast paper. I mean, I think I told you this already, Checkmate. I can't remember if I've said it on another pod or not, but you basically just perform basically by yourself. I know you're in the research chat room, talking to some people about some of the stuff in your paper, but in general, you basically performed a 10K on the Decred network by yourself. So the value that the stakeholders got out of that one piece of literature is just like, it's amazing. And in a decentralized ecosystem, especially with these public ledgers, somebody needs to step up to the plate to document this type of stuff, right? Like, I think documentation is one of the most important things that a cryptocurrency can have. And the amount of documentation that Decred has on it, from like, if you just go look at the decred.org website, all these different research pieces that come out, the level of documentation that Decred has not only inspires confidence for people that don't really know much about the project and start looking into it. Like, for example, one of my friends, he actually hit me up the other day. I've been shilling Decred so long to all my friends that they're starting to look at the price and like, this is such a steal. If this kid is that bullish on it, why don't I scoop it up? But everybody always has the same questions. It's like, where do I start? And it's always podcasts and literature, right? So I think in general, what you did in this entire piece, especially with the way you presented some of the data in completely different ways that I never even thought about before, it's a type of piece that, at like, I don't know, like whatever you're charging to the Treasury for this type of information, this is valuable information to keep looking at over and over again. And obviously over time, when these type of charts like start getting uploaded live as well, people can just like audit this type of stuff on their own, right? By looking at the charts. And Checkmate, also to your point, when you were talking about some of the Treasury analysis stuff that you did, I thought that was really cool. One of the things that actually stood out to me in a big way, I haven't really fully digested what my impression is and what I think what it implies and what it could actually suggest moving forward. But I thought it was pretty cool that, if I'm not mistaken, Checkmate, feel free to correct me if I'm wrong, but that each ticket commands 15.5 DCR worth of Treasury, right? So each ticket
was really impressive, wasn't it? I mean, you're locking up 130, 150 DCR. We're talking about 10 to 11% of your ticket purchase price. In terms of say, I mean, that is really remarkable. That's commitment.
Yeah. And I mean, for people that, that it's a really good metric for, I know a lot of people, for a while, I used to harp on how Decred's not only a governance coin, but to an extent it also is though. Right. So I think when people buy into the project, with Bitcoin, they go with rough consensus. But with Decred, it's substantially more tangible. Right. So when you buy into Decred, you're buying into the security assurances that are provided by the hybrid proof of work, proof of stake model. But also when it comes to the governance, you're buying into the social stability that's provided by being able to socially coordinate, and also via the Treasury, which will help you financially coordinate as well, right? To be able to keep the pieces moving. So when you get to see something like a metric to that extent that shows, hey, how much does my vote actually count, right? How much does this actually matter in these types of votes, right? So it's something that I'd never even thought about before. So when you provided that chart, it was like a big aha moment for me. And then what's
interesting is, like, if you look at the 28-day vote period, right, you're talking about a month. So let's just call it a month. For a month of time, you get 10% of your vote power. Let's multiply that by 12 to give you an annual basis. You're pretty much getting about the say of one ticket worth, more or less, over the course of a year. You're like annualized. Your vote, whatever you lock up, you approximately get the vote of the value of a ticket, right, over the course of the year. So that's another good way to look at things.
Oh, that is a really good way to look at things. Another thing, I'm not sure what your thoughts are on this though, but when obviously outflows on a USD basis from the Treasury, they've gone up because it's been a sustained bear market, right? Like basically since the capitulation in beginning of 2019, we've basically seen an acceleration in terms of USD value exiting the Treasury. Another way people can look at this, sure, it's not great, but another thing you can think about is like, when you start looking around in the world that we're living in right now, people are getting laid off left and right. And you obviously, with people getting laid off, means less productivity, right? What's really interesting and, unique about things that are DAOs, right? They're incredibly robust, right? You can keep pushing the envelope forward because, Decred doesn't have any debt. The only debt that Decred has, it accrues on a monthly basis to short-term work that's completed by its contractors, right? So, with a DAO structure anchored on top of a decentralized entity that doesn't take on balance sheet debt, you can keep pushing the envelope forward. So obviously, some people might think, oh, this is bad that USD flows are exiting. But what it can mean is that productivity is actually remaining equal despite adverse, quote unquote, decred economy conditions, right? So, with that in mind, it's good to see productivity still at an equal level, or if anything, ramped up with new contractors entering the ecosystem on a consistent basis.
Jordan, do you want to go over your I want to say your on-chain roundup, just anything that you're seeing in the space?
Yeah. So, at a high level, with this dump, everything from a Decred on-chain basis is just in buy territory. And, for a lot of this stuff, it actually has been for a while. But, a few pieces, there's 3 different things that I'm looking at right now that actually fluctuate. There's some ones that are like longer curve, take longer to react and stuff like that, like the MBT ratio, that can sit in like undervalued or overvalued territory for a long period of time. But there's actually 3 tools I like to use that like to give me a gauge for where things stand on a short-term basis, right? So I do the ticket funding rates, which I released in a paper already. We had very recently one of the highest demand to hold tickets based on the funding rates very recently. And right now they're actually in relatively bearish territory in terms of people's willingness to hold tickets. And that just naturally happened, before people start freaking out about that, the way proof of stake retargets, right? It just naturally happens. It ebbs and flows up and down, right? You go into periods where people are happy to hold tickets, where people don't want to hold tickets, right? But like I showed in the ticket funding rates paper, you want to focus on the periods where it's at the extremes, right? And we had that crazy extreme reading very recently. So that's something I'm still keeping an eye on, because what was really weird about that period in time when that happened is that it happened, like you got that extreme reading and then Bitcoin just went off a cliff, right? And while that was going on, us 3, we have our private chat where we talk all the time, that Decred held like a rock during that period, right? The willingness to hold was extremely high. And I think it showed in the price action, right? And then ever since we started going back into the unwillingness to hold territory, that's when you kind of got like a little bit of the follow through on the dump on a DCR BTC basis. So, that's something I'm keeping an eye on. And, it might be one of those things that just follows back up, and, we might have a ripper at some point that you might be like, all right, well, that made a ton of sense. Maybe that did put in the bottom, but considering the macro environment with, coronavirus and Bitcoin going off a cliff and, a lot of people getting margin called, that might have impacted what eventually could have been. But I was kind of speculating that was going to be a breakout point, but considering the macro conditions, it was very difficult. And then the other 2 things that I'm looking at is one called the max volume indicator. I'm going to publish it in a new piece soon. I've actually shared the chart on Twitter a couple of times, but it's a short-term valuation tool that helps you value the network on a USD basis. And it's actually one of my few valuation tools for Decred that you can actually predict also Bitcoin overvaluation or undervaluation, which is really cool. Because, cryptocurrencies on a USD basis, they all track the same path, right? So that one right now is in super undervalued territory. So that's why, a lot of people are really speculative and fearful of what's going on in the Bitcoin market. And people think, Bitcoin is going to dump and go back to the lows again. This indicator is what's keeping me like a little bit cautious, on guard of that type of, group think right now. So that Decred, so max vol indicator is actually at a very low level, and that will be out in the next week or 2. I'm currently drafting up the bullet points to put that piece together. And then the last piece is the 142 day sum of ticket volume. And for people who don't know why 142 days is significant, if your ticket does not vote within the Decred network, 142 days, after 142 days worth of voting, I think it's probably measured on a block basis, but I don't have the number top of mind, your ticket expires, right? So basically it's one full run through the entire ticket pool to an extent, or one voting period basically for a maximum not voting ticket. And it is in super oversold, undervalued territory as well. So that's another to keep in mind for the people at home. This is one of those indicators that it doesn't happen very often. So when you get down there, it's probably time to start accumulating. And keep in mind, all these things are on a USD basis, but those are the things I'm keeping an eye on. And I'm sure people are wondering from a DCR BTC basis where things stand. There's actually one more tool that I actually like to use. I'm probably write a piece about this at some point as well, is where you take the Decred USD realized price and divide it by the BTC USD realized price. And then you get an on-chain realized price. Basically, you're taking the on-chain fair value of Decred and dividing it by the on-chain fair value of Bitcoin. And one thing that you'll look at, I can post the chart, not today, but probably tomorrow, later in the week, is that when DCR BTC finally broke through that 0.0019 area, that's when that fair value price, that on-chain fair value price, actually started dipping downwards and putting pressure on the market traded price. So that's another thing I'm keeping an eye on. And, if Decred gets a strong breakout from that, that might be time to start reconsidering where the price stands and, hopefully its upward trajectory to, the previous all-time high and then new highs, obviously.
Yeah, I mean, what was really, really good about that on-chain wrap-up that you did, Nino, was that it basically covered, and to be honest, it took me aback, just how many metrics have actually been developed for this network. And I think I put out a tweet that was basically saying, find me another network, not even outside Bitcoin, potentially at all, that has this many metrics that have been developed. And it was quite amazing that these have actually been developed probably over the last 8 months, maybe 12 months. So there's as you were saying about documentation, we're slowly building up an increasing number of these metrics to study and understand the heartbeat of the Decred network. And they all have different levels of signal. So, something that you and I are currently working on in the background is, part of phase 2 of my latest proposal, trying to get these charts built up and stuck into DCR data. And just to give stakeholders a bit of an update of where we're at for that, we've basically compiled the calculations for all of Nino's metrics that he's developed. I've got mine running in the background. I'm in the process right now of building up the sample charts to kind of fit in with all of those. And what we're really targeting is hopefully by end of next month to pretty much have it at a state where we've got a sample chart, we've got the calculations necessary to then develop those Git issues, and then we can start coordinating with the DCR data devs to see exactly what they need to do to implement them. And at the same time, I'm starting to get my head around DCR data and seeing how I can help contribute and potentially take some load off, but also start expanding the research scope into a more granular level. So that's something that Nino and I will both be working on. And I think once we get into the nitty gritty of the finer detail that DCR data provides over the more macro view of the data sets we have at the moment, that's really going to be an exciting process. And something else that's currently on the being worked out is the team over at Glassnode, who have, in my view, a very exceptional charting package. They've got really, really good data for Bitcoin. I recently had a conversation with them in terms of getting a DCR set of information. So they're currently looking into spinning up a DCR data instance because that will make their job of actually extracting data and building charts a lot easier. But they've certainly expressed interest in getting DCR metrics up on their site live. So it's been a bit of a two-pronged approach at the moment, and that's going to be a really welcome bonus. So I had a chat with the team. They're a really, really good group of guys. I'm looking forward to getting that built out, and at the same time, we're in the process of getting these things built up onto DCR data itself and the Explorer. So exciting times ahead.
Yeah, I agree, and I've seen some of Nino's weapons. I'm definitely looking forward to the DCR data stuff. Absolutely.
Yeah, I think it's going to be awesome. And also another thing that people need to keep in mind is that a lot of the on-chain data that Decred has is not only incredibly rich, but it's proprietary, right? The hybrid proof of work, proof of stake combination makes Decred incredibly unique. So when all is said and done, at the market cap that Decred's at, it might have the most robust on-chain data suite when it in a year or two. So I think that's part of the end game. That, Checkmate, you and I have talked about this. So we'll see how the build out goes, and getting like Checkmate, like you talking to the Glassnode dudes is awesome because their website's amazing. And the more that we get this on-chain data into other people's hands, I think it'll start piquing other people's interest. So yeah, it's exciting times ahead in the on-chain world for Decred.
I'm bullish on the amount of documentation Decred has. It is world class for sure, and it sounds mundane, but it's not. It's actually really, really high signal.
Yeah, it is definitely world class. Bullish on docs. That's
bullish on docs.
Gentlemen, let's cover current events and the state of the market, which it's kind of gruesome, to be honest. What are your thoughts, and where do you see us going? I'll chime in on the end.
Yeah, that's the thing. It's what we're seeing in the world is both a supply and a demand shock, right? Around the world, it's the virus is obviously causing havoc in in markets everywhere. We've recently seen a stronger coupling between Bitcoin and risk-on assets like stocks. And it's quite interesting because when you look at Bitcoin's behavior through the market, it's always been uncorrelated, right? We're talking about correlation factors of 0.2 to pretty much everything. And then it's really been on the hit of this virus that we've seen a spike in that, jumps up to about 0.6. And so really the question comes in, how long does that last? Bitcoin kind of straddles, and even the cryptocurrency space at large straddles that risk on, new asset class, emerging asset class, but also has its own set of fundamentals and behavior metrics. When you look at Bitcoin, it's got the halving cycle and the supply cycle and the behavior of miners. That's got costs associated with power. This is the same for Decred, right? There's the unforgeable costliness of the proof of work. That's the electricity burn, and it's the hardware, the ASIC requirements. So to be honest, it has its own set of fundamentals. So at the end of the day, the markets at the moment are experiencing a liquidity crisis. Everybody needs, when the going is good, it's time to take, you take out debts. Companies, accumulate debt levels because they can afford to pay them back. They've got income, and interest rates are relatively low. What we've now seen is that basically the halting of a lot of companies' income, and suddenly all those debts are still due. So there's a liquidity crunch. There's a demand to access dollars in this instance. We've seen the dollar outperform pretty much every other currency globally. We saw Bitcoin and the crypto market take a hit. As Nino mentioned, Decred versus the BTC ratio really held up. I was amazed at how well it held up during that process. So that it indicated that there was the demand to sell DCR, the necessity to sell DCR was actually relatively low. We saw a lot of other altcoins really get smashed during that time. So, and in fact, the correlation factor between DCR and BTC spiked as well. So what that really indicated is that Decred was coupling itself to Bitcoin, whereas a lot of other projects actually decoupled from Bitcoin and dumped quite hard. So that is a positive sign there. But on a global sense, what I'm really seeing is that Bitcoin and the cryptocurrency space is kind of in this middle ground where it could be a new asset class and it could move on its own fundamentals, but at the moment it's correlated and straddled to that risk-on asset. So it's going to be very interesting to see how it plays out. We're certainly seeing an environment of stimulus, and stimulus to an extent we've never seen before. So what I'm really looking at, and again, nobody knows the timing, and these events are substantial, and we have a very significant demand shock in terms of disposable income, jobs, and everything else. So it's not a great picture. It's kind of negative across the board. But what I'm really looking at is when we move from the initial, at the start of any kind of downturn, we always have a deflationary process where credit gets destroyed, money gets basically destroyed because credit doesn't get paid back, and there's defaults and things like that. So initially there's a deflationary shock, and there's a flight to dollars, right? Because everybody has dollar-denominated debt. There's a flight to dollars as people have margin calls. They sell the most liquid assets that they can. We saw gold got sold off. We saw Bitcoin got sold off. And we saw stocks get sold off. Everything gets sold to cover margin calls. Now, there is a point during this whole process where there is government stimulus, and we're seeing that really ramping up now. And the long-term effect of that is you go from a deflationary process into an inflationary process, because the solution and the toolkit that's available to central banks is by and large an inflationary one. It's reducing interest rates, which are already at zero. They could go negative, which makes the desire to hold dollars very small, the desire to invest it much higher. We're seeing, you'll see the actual impact if they're minting, and we're talking trillions of dollars now. As trillions of dollars get minted and circulated into the economy, the Cantillon effect is going to be very real. So those who are close to the source of that money creation basically spend in the uninflated prices, and in fact we could see deflating prices because the demand and the need to get anybody in the door to buy things increases, so prices come down. That stimulus will get spent into a depressed economy, and once those dollars start to really circulate, you then reach the point where you start to see inflation. And I mean, we're talking about a $2 trillion stimulus, I believe was the latest that the US Fed announced. And we're talking about a $2 trillion stimulus into a monetary base of something on the order of about 80 trillion, right? So it's not an insignificant dilution. So we're talking about substantial movements here. So I think the timing is all difficult. It is certainly a risk-off period of time. We don't really know how cryptocurrencies are going to perform. We know that they have the potential to be store of value candidates, but they really are sitting in that candidate space right now. And it's going to be that transition from a deflationary to an inflationary process that will really drive any kind of fundamental movement in cryptocurrencies. But at the same time, this is what Bitcoin was released for, right? It was released in the pits of the financial recession in 2008. And, really, when you look at it from when you take a step back, there is a demand loss from, people won't be taking as much risk. But the fundamentals of why Bitcoin and cryptocurrencies and store of value candidates like Decred were created, fundamentally, this is really the time when they need to shine. So, me, for example, I cannot, it's been an amazing process for me internally, because I've been really accumulating for a while now. I honestly feel a sense of calm knowing that I have my own bearer assets that are fixed supply. I know it's digital. It's a digital money. We're already seeing the transition out of cash as a result of this virus. And we're going to see central bank digital currencies. We already saw a few headlines about that recently. So when you look at it from a fundamental, the stage is absolutely set for store of value, fixed supply, inflation resistant, and censorship resistant cryptocurrencies to shine in this particular environment. In an inflationary environment, in adverse monetary environment, we're already seeing other currencies really getting destroyed against the US dollar. The pound, the euro, the Australian dollar, they're all really suffering at the moment. And to be honest, even during that process, Bitcoin has actually performed quite well in that regard. So we're going to see that flip eventually. It is the time for cryptocurrencies to shine. And from a fundamental standpoint, a digital hard-capped self-sovereign money like Bitcoin and Decred, really this is their time to succeed. So it's a gamble as to when this thing really plays out. But from a fundamentals perspective, the stage is really set.
Jordan, your thoughts?
I don't even know if I could have said anything better than what was just said. So what I'm going to do is I'm going to take a softer approach, right? Checkmate just nailed the more like quantitative approach. I think what's going on in the world right now, and people won't admit it, is that there's a sense of disillusionment, right? Like the systems and institutions that we've trusted for so long. As an American, you get this weird sense of calm living in the United States because nothing bad has ever really happened in the United States, right? Like 9/11 was the closest thing to a wake-up call that Americans have ever had, right? Like World War II, yes, Hawaii got hit, but like the mainland United States was just like untouched, right? So I think what's going on right now, there's like a wide sense of disillusionment, loss of trust in the system, especially for, younger people, right? Like, I know a lot about the financial crisis. It was in 2008, but I was still in high school. So I didn't fully understand the magnitude of exactly what was going on. And the fact that we're just back in the same place, but obviously 10 times worse. And partially you could argue that coronavirus is the thing that just popped the bubble. I think, other people have said this. I can't even take credit for saying this, that nothing will be the same again after this. And when you get into periods where things are not going well, this is like even just outside of the crisis, outside of, financial stuff, just life in general. When you get to a point where you're like, things are so bad and you're like, how did I let myself get put in this position? That's when necessity kicks in. That's when you're like, you know what, I need to make a change. And it's not just for fun. It's not cosmetic. This is actually needed. And I think some of the stuff that Checkmate highlighted on in the current money system, the current, macro system in general, the legacy system, this is where what Bitcoin was made for. And this is what Decred was made for. Bitcoin did it from the hard money, hard cap supply way, and not a debt-based money system. And Decred's doing that, plus the social coordinating and building public digital infrastructure. And I think the combination of those two things, it's just bound to come around. So if you've been in crypto for a while, some people are the diehards that are actually here to see what this technology can do over the long haul. And for me, since I got into the crypto space in 2016, this is the most sure, these are scary times, obviously, and make sure that you're always like well prepared for the worst. But this is the most excited I've ever been about the cryptocurrency space since I got into the space. So, maybe some choppy waters ahead, but as a whole, I think this is the opportunity that I think Satoshi had in mind when he made Bitcoin, or they made Bitcoin, and they were looking for it to be at a minimum complementary to the current system that we actually have.
We agree and disagree on a lot of things. I think we'll see what will happen. Obviously, all the signs point to upside for the space, and what's happening right now with BTC, with the Fed printing money and just all the obvious things. BTC was born in 2008 in the fire of the financial crisis, but it's never experienced a recession. So we'll see how bulletproof it is. It'll really be tested in these times.
I mean, I think for me, like one thing that I've certainly, in my circles been making sure to reinforce is that cryptocurrencies, they are young. They are not hedges against inflation. They're not hedges against recession. They are hedges against inflation. And often what you have to look at is, in the early stage of a real downturn, people just fly to the one thing, right? And this is actually an important note from a monetary standpoint, the most liquid good, which is right now dollars, right? Everybody has to exit to the most liquid asset because it's the most risk-off asset. Now, what we'll see is that transition where, dollars are not without risk, right? Because there is inflation, so you have to beat inflation. It's what comes next. That's really what cryptocurrencies are looking at. They are the longer-term view of what comes next after the initial shock. And, what we'll probably see is a rally up in stocks and things. You get the relief, right? The bearish relief rally. And it really depends how that performs. And, it depends how the stimulus actually affects the market. To date, we've pretty much seen all stimulus get sold, which is, people have been talking about the Fed put. This is kind of maybe the end of the Fed put having its effectiveness. So, really fixed supply of crypto assets. Their focus is on what comes next. It's the inflationary response by central banks, which we are seeing play out in full effect. That's really what we have to be keeping an eye on. But it's certainly not a hedge against a recession. And I really like what you said, Nino, about, there's a general sense of disillusionment. That's really what we're seeing here. We're seeing people not see the narrative play out exactly as they planned and walk away from the thing. And quite often, that's where you actually see opportunity, right? Because from a fundamental conviction standpoint, always be careful in these kind of scenarios because, any kind of unknown, we really do move into this realm of risk capital only. But at the same time, we've seen that, the sell-off on the 12th of March it flushed a lot of the leverage out of the system. And that's a really positive thing, actually, because it means that you've had this accumulation of leverage in the Bitcoin market. And now that we've had that flush out, right, all people who had massive short, massive long positions, because of the volatility, just got completely wiped out. And we actually haven't seen an uptick in that leverage as well. So, in general, that's a positive thing. It's kind of a reset. And now we can look at a spot-driven kind of a rebirth where we take it back to ground zero. And, ideally, if there's ever a time for fundamentals to be the primary driver of price, we're kind of in that zone right now. So, it is a case of be careful, but also be optimistic when other people are scared. And that's really what Nino and I are always looking at the data. That's why it's important right now. Data is your best friend because it will tell you what's going on. So, that's really something to be keeping an eye on.
Well, gentlemen, I appreciate you coming on the show. It's about that time. We'll do this again, and be sure to check out Rough Consensus, a podcast that we're doing regularly. You guys got any final words?
Yeah, no, it's good for me. I check out Rough Consensus. It's it's a fun little project we've got going on. It's kind of a place where we just get to talk openly, and similar to this. And just as a side note, our next episode will be looking specifically at Decred on a fundamentals basis. So really exploring the project from A to B to kind of a beginner's guide to the whole thing. So that'll be an exciting episode that I'm really looking forward to.
Yeah, I'm glad you brought that up. I almost completely forgot to mention that. That'd be a perfect thing to talk about on Decred in depth. But yeah, I've actually had a lot of friends, like I mentioned to you guys, that are trying to get into Decred now. So that'll be a very useful episode for them. I'm excited.
Excellent. Take care.